Good morning, friends. A warm welcome to all. Today, the webinar is on corporate social responsibility in the emerging scenario with latest amendments from Companies Act 2020. India is the first country in the world to make corporate social responsibility mandatory following an amendments to the Companies Act 2013 in April 2014. Businesses can invest their profits in areas such as education, poverty, gender equality, and hunger as part of any CSR compliance. Amid the COVID-19 outbreak, the Ministry of Corporate Affairs has notified that companies' expenditure to fight the pandemic will be considered valid under CSR activities. Funds may be spent on various activities related to COVID-19, such as promotion of healthcare, including preventive healthcare and sanitation and disaster management. And for this, we have a guest speaker, CA Divya Abhishek ji. She is a practicing chartered accountant at Chennai, who is currently the partner of Messrs. DSNR and Company Chartered Accountants. She is an All India 46th rank holder in the CA final examination and an All India 23rd rank in the ICSI examinations. She also secured the All India 4th rank in the International Taxation Examination conducted by CAUT. She is qualified proficiency test for independent directors data bank conducted by the Indian Institute of Corporate Affairs. She was the youngest ever president of the Inner Wheel Club of Madras Next Generation and is the secretary of the Women Professional Empowerment Forum of India. She is an expert in audit, company law, cross-border transactions, and international taxation. She has the distinction of being the first Secretary Business Development and Trade Relations to the Honorary Consul of Zambia in South India. She has been nominated to the following committees constituted by SAIC of ICI, Corporate Laws, and Corporate Governance Committee of SAIC of ICAI. And we have with us none other than C. Vivek Kunanaji, founder of CS Ansar, and his name is enough for the CS. Now, I would request him to welcome her and give her a welcome address. So, please.
Thank you very much, Stuti ji. CA Divya Abhishek ji, speaker of today's webinar, CA Stuti Majan ji, all other respected member of the profession. First of all, a warm welcome to all of you, and I hope everybody is fit and fine. As Stuti ji said, under this Companies Act 2013, India becomes the first country in this world to make it mandatory to spend some amount under the CSR activities. And companies have to spend under various activities like into the education, hunger, and some other activities also. And in this COVID-19 pandemic, it's more responsibility of the companies. And even Ministry of Corporate Affairs have notified some more activities so they can spend it. And also now there are monetary provision is also there for non-compliance and where to spend these activities, what's new notification and what's the monetary clause are there. For that, we have very young, very dynamic speaker with us, Divya Abhishek ji. And my sincere thanks to Divya for accepting our invitation and giving us her valuable time. And now over to you, Divya, to please guide all our members and us regarding this CSR activities. So once again, my sincere thanks to you and over to you, Divya. Thank you.
Thank you so much, Stuti ma'am, for such a wonderful introduction, and Vivek sir for really setting out for the topic today. In fact, I've keenly followed CA Sansar for many days now, and it's such a useful portal for all upcoming CS as well as the thoroughbred professionals. Very, very relevant topics are covered. Despite his busy schedule, Vivek sir ensures that we still have this session and wants to benefit all the members. So that is the kind of dedication and support that he gives to the CA community. We're very, very appreciative of it. Thank you, sir. So without further ado, let's get started for the topic for today. As you all know, it's going to be CSR in the emerging scenario. Now, traditionally, businesses were run to make profit to ensure that the shareholders were satisfied. Over many years, this has evolved, it has changed. Today, it is no longer just keeping your shareholders satisfied. It is acknowledged that you live in a society where you have to satisfy both customers, suppliers, the various stakeholders that are there around you. So this is where CSR even came to picture. That's where it gave birth through Companies Act 2013. So you must be wondering, it came out in 2013. Why are we still discussing it today? There have been so many amendments, so many changes and evolution that have been happening in the session. In fact, there are about 80 amendments that have come out through these 7 years that the Companies Act has come into picture. So in this backdrop, In today's session, we are going to cover some basic provisions of CSR, but more importantly, we're going to understand the practical applicability as well as in the event of COVID, what comes under the CSR bandwidth, what can companies do to satisfy the conditions. As I already said, and even in the introduction to said that many countries in the world have now adopted CSR, but India is one of the very, very few countries which has mandated the spending of it. It is called comply or explain provision, where you have to explain if you are not spending on CSR. So very heavy onus is put on the board of directors of the company, which is why it is important that as professionals and also for the people who are working in industries and in various companies, it is important you keep track of these amendments, because you will be surprised. As late as 2020, there were tremendous amendments that came into picture, which will completely change the landscape in which we are viewing these CSR provisions. Simply put, in very, very layman terms, it is the act of giving back, where it is not, you're not donating, it is not responsibility, but it is the duty of the company to ensure that it contributes to these CSR provisions. Now, why CSR? As you can all see, the logo on top, it's Volkswagen, very, very popular European car maker. In 2015, they had faced a huge loss where they didn't go through the carbon emission principles. So customers were not satisfied. Immediately, they had to retract many billions of cars that they had manufactured because they did not comply with CSR. So while CSR might look like recommendatory provisions, please keep in mind, in the world in which we are living today, in the event where a company does not go through CSR, it is viewed adversely. That is, the people do not have the satisfaction and the confidence in the company if it is not CSR compliant. That is how much of a paramount importance this concept and provisions have gained. Where do we look at these provisions? None other than our Companies Act 2013. Then there are rules specific to CSR. Not just that, ICAI has given detailed guidance notes, FAQs, and even ICSI has given you a secretarial standard as well as FAQs on CSR. So as you can see, it is not just section 135 of the Companies Act, but when you think about CSR, you have to read it in consonance with all of these provisions together, because that is the impact that it can have in your company. So recently, the government is also working on a national CSR data portal. It is a centralized portal where you can go check the CSR activities done by companies and various other provisions relevant to it. It is still in progress, it has not yet come. As I already mentioned, there have been multiple amendments. The most recent amendment came on September 22nd, 2020, in the form of Companies Act 2020, where again Section 135 was amended. Just before that, in 2019, there was a lot of hue and cry for this because there were very, very different amendments. More responsibilities were placed on the companies, which I'm going to take you through the course of the presentation. So before we understand amendments, let us quickly understand the basic concepts. First is, for whom is CSR going to be applicable? If applicable, what should a company do? Where should the company invest in? And how should it do it? So these four questions is what we're going to first tackle. For any company which has a net worth of 500 crores or more, turnover of 1000 crores or more, net profit of 5 crores or more, any of these conditions, if it satisfies, then you have to go into the provisions of CSR under section 135 of the Companies Act. Now, largely from experience, the first two criteria are very broad based, not many companies fall in. But the third criteria, where if your net profit crosses even 1 rupee above 5 crore, immediately you fall into the ambit of CSR provisions and you have to comply with it. What should you do if that is the case? 2% of your average net profit of your 3 preceding years, you have to set aside and invest it in the necessary activities as mentioned. Now, is it applicable to all companies? Whether Section 8 company, it's already an NGO. Does it still need to do CSR activity? Government company, most activities of government is towards your public sector undertakings and for the public. Please keep in mind, there is no restrictions or exemptions. CSR is applicable to all companies. The minute you come into the Companies Act 2013, you have to comply with the provisions of CSR. Can you collaborate with other companies? Can two companies come together and do a big activity? Absolutely yes. As long as you have the documentation and reports for the same, it is possible. Now, earlier I said, the minute it becomes applicable to you, you have to set aside 2% of your net profit for the average last 3 years. What happens in a scenario where Previous year you earned profit, but the 2 years before that you earned loss. Now this is something that many companies face. Please keep in mind it's your average net profit. So you can add your losses and only the net amount that comes out that you have to apply your 2% into CSR. What is this net profit? How do you come across it? It is going to be a profit before tax. This has also been defined in the Act under Section 198, where there are certain criteria and conditions which you have to follow to arrive at this profit. Simply put, whatever pertains to capital nature, like your capital assets, losses of capital nature, profit that you get from premium, all those capital nature you can exclude from your profit, and only what comes in the balance you have to set aside for the purpose of CSR. Now, let us take a scenario where CSR becomes applicable for you. Now you start doing the 2% every year. Now, this year, which typically many companies are going to face during the times of COVID, you are not going to make profit. You will not satisfy the other two criteria also. Correct? So, in this case, can you stop spending for CSR? Unfortunately, the answer is no. For 3 years continuously, if you don't comply with the conditions, is when you can stop spending. Just because you're having an anomaly year because of COVID, just because you're earning loss this year, that does not absolve you from the provisions of CSR. Very important provision this is to be kept in mind for companies which are going through a setback this year. Please keep in mind you have to set funds aside for CSR if you're already complying with these provisions. Now, after these provisions came into picture in 2013, there was a lot of uncertainty when they set profits. When they say the criteria, the three criteria that we said, which year does it pertain to? 2017, the Amendment Act came with a clarification saying it pertains to the immediately preceding year, which means for 31/3/20, your criteria conditions will be 31/3/19 audited financials. So the immediately preceding year, you have to check the criteria and then proceed with the provisions of CSR. Y is a holding company of X. X is a 100% subsidiary. Now, for X has already crossed the criteria and they're complying with the provisions of CSR. A logical question arises: does Y also have to comply with it? Now, we have seen whenever a company is a subsidiary, most of what applies to the subsidiary will automatically apply to the holding company. This is a good exception that MCA has given, where just because your subsidiary company crosses the criteria does not mean automatically it applies to holding company. You do not see it on a consolidated level. Every company has to be seen on a standalone basis for CSR. The reasoning is you have to spend some money from your profit. If you are not earning enough profit or if you're not crossing that criteria at all, you do not have to be burdened with the responsibility of following the CSR activities. Now, let us take another scenario. A company would have earned profit, but it might not have been enough. Can that company contribute in kind? Can it distribute packets? Can it distribute items, laptops? Is that possible? This again is a good provision where, yes, you are allowed to contribute in kind for the purpose of CSR, but please note you have to take the cost of the material that you're supplying, not the sale price. You cannot add margin and include that as part of CSR. Whatever is the cost price of that material, that is still allowed. So it's a good provision for companies, especially during this year, which has been a very difficult for many companies, been a setback, like I already said. So please remember, you can always consider donating in kind in terms of materials, products. We will cover this more in detail over the course of this presentation. So how do we do this? Now we are aware when it's applicable, we are aware how much is applicable. How we should do this is also codified in the Act. They've said something called as a CSR committee. It is a mandatory committee that every company has to form for whom CSR becomes applicable, in which at least one director should be an independent director. Now, again, questions came about where for private companies, independent director provisions might not be applicable. In that scenario, do we still need? The Act came out with an amendment notification and they said that is not required. If you are a private company for whom independent director provisions do not apply, then 2 directors or more is enough for the purpose of complying with these provisions. And even for a foreign company, like I said, every company formed under the Companies Act 2013 CSR becomes applicable. So even if you're a foreign company, you have to comply with the provisions of CSR and ensure you form a CSR committee. Now, once you form the committee, it is advisable as per the secretarial standards that at least immediately you have one meeting. as and when the committee is formed in order to discuss the CSR potentials. But please keep in mind there are no limits on the number of meetings. There's only a guidance given where whatever applies to board meetings in terms of your quorum, in terms of the number of meetings, it is reasonable if you follow the same aspect for your CSR. Minutes have to be maintained. That is a proof that the meeting has happened. There are some practical issues that we face when we talk about the CSR committee meetings. Whether these meetings can be held through video conference mode, answer is yes. You can definitely have your CSR committee through video conference. The motive behind this committee is to ensure that there's a specialized body that is looking at these provisions, because the hard-earned money of the company should go into the right pockets. So they have to know the law and various aspects that come with it. So it is encouraged for companies to have meetings on a quarterly basis, and this can be done through video conferencing mode. What should the committee do once they have set out a meeting? That also has been codified in the Act. One, you have to come out with a policy. It has to conform to Schedule 7. Schedule 7 is nothing but it gives you an exhaustive list of what activities comprises CSR. Very good provision, because there is no gray area whether this will be CSR or not. Those doubts the government is trying to allay by giving you very specific aspects and buckets in which we will be covering. The committee should also understand how much is there for CSR, where you should allocate it. One very important aspect that many companies could have ignored is this CSR policy has to mandatorily go on the company website. So please ensure that you form the committee and whatever policy it is there on your company's website. Let us take a big MNC. They might have various subsidiaries. So most of the decisions will always come from the group company. Now in this scenario, whether you can have a centralized committee for the group company, one committee which will take care of all the subsidiaries, the answer is no. This has been clarified in FAQ. You have to ensure every company has a CSR committee. Now, if you notice, the government is pinning down responsibility in terms of the CSR provisions. This has even more been stringent now, because in 2020 there has been an amendment where they have defined what should be your CSR policy. Earlier, it was felt for the last 7 years. It was taken care as if it was a postpartum activity. You finished everything. End of the year, the board will sit, do a policy, put it in the board report, and finish. Now that is no longer encouraged. They have defined something called as an annual action plan. What is the CSR policy has been defined. How it has to be done has further been codified. So it's a good amendment where the CSR committee can no longer just meet once a year. It is encouraged to have more detailed planning before you spend money on CSR. Let us take a scenario where you have a long-term CSR project. It might run into many years. Now, in that case, do you have to have a CSR policy every year? It has been a more practical scenario where they've said not required. In your board report, you have to mention that this project is going to go on for so many years. It is not necessary for each year you have to have a specific policy. So this is to enable companies to continue and motivate them to invest in long-term projects and not make it a more procedural aspect. What is the role of the board? Now we have understood what a CSR committee needs to do. The board has to approve the CSR policy. Not just that, they have to ensure it is implemented. It has to go into their report. And last not but the least is whichever company is not spending the CSR, the board has to find reasons and record it in their report. So this is a very good metric. It's a responsibility cast on the board to ensure that the company is following the CSR policies. What is new in this? Now already companies were struggling, thinking already have to form a CSR committee. After the CSR committee, have to form a board to look into the CSR. Now Companies Act has added one more layer where they have said a CFO of the company has to certify this CSR policy. What does this mean? It means that the CFO was not at all involved in this process, has now taken the owner's responsibility, because he has to certify and say the policy is done correctly, the board has monitored it, it has been allocated and it has been spent. So this has not yet come into play. This amendment, it was open for public comments till April 2020. We can expect this rule to be notified anytime. If that is the scenario, please keep in mind, CFO of the company has now be alert with respect to CSR policy. He has to attend the CSR committee meetings to understand what has happened. He has to be aware with the board and ensure that Only after he verifies, he certifies these. By this, indirectly, they're also bringing CFO as a responsible officer. In the event where the company does not comply with your CSR provisions, the CFO can also be held liable now. Two other aspects that have been brought out as amendments, which are very important. One is, as I already said, your CSR policy has now been defined in the form of rules to CSR. This is again yet to be notified, but we can expect it to be notified anytime. The important aspect here is they have said approach and direction given by the board. So earlier, it was only the committee that made the policy. Now they've brought the board also and said they also have to be part of formulation of the policy. The second amendment, which I feel can be a little restrictive for companies, they've said any company that is doing a long-term project, it cannot exceed beyond 4 years. They've given a maximum timeline. Let us say I'm starting a project this year. I can finish it till 2021 and I can do only for 3 more years till 2024. There's no clarity whether this year can be expanded. And one more aspect is, if supposing your company is doing an ongoing project, earlier what we did, only when we spent, maybe at the end of 2 years you'll spend, at that point only we consider CSR. Now they want you to allocate it equally in the period of 4 years. So this is a good measure for the government to keep track of execution, but it might be a little more difficult for companies. So for all those companies that are having long-term projects, you have to look into this and have more short-term deadlines to complete the same. Let us take an example. I think we're going to deal with more practical scenarios for us to understand these amendments and changes. Let us take HUL, the brands that you see are very popular. One measure that they did for CSR, they went to various villages and then they distributed hand sanitizers, they distributed wash products for the villagers to use and also educated them. Now, this they put it under hygiene health practices for the purpose of CSR. A very important question to you. Will this be considered as CSR? Now, naturally, they are educating the rural India. They're giving them products to enable them to achieve this goal, good hygiene practices. The unfortunate answer is no. So, which comes to the next question. What will be considered? Why is it no? Even though HUL has done all of those activities that has empowered rural India, end of the day, what they did, they've given their own products. They've given it to people, they've distributed as samples. They've taught them in a way to use their products and the way to use their products again in the future. So the Companies Act views this as if it was a marketing activity, as if it was a promotion of own product done in the normal course of business. So please remember, when we talk about CSR and we pick out CSR activities, they cannot be something related to your company's products. It is not a donation drive. It is not a charity drive, but it is a contribution that you make to the society. The Act is very mindful of this. HUL faced a huge loss because of this. Even though they've spent a heavy amount on this project, it was not considered as CSR. Very rule breaking amendment. What is considered as CSR? Again, Schedule 7 of Companies Act 2013 has given you specific 12 items. Only if you put your money in any of these buckets, it will be considered as CSR. Very popular amongst those is eradication of hunger and poverty, contribution to PM Relief Fund. I'm sure all of us would have done in some form during COVID, gender equality, education, and hospital. Now let us understand this with some more examples. What happens in a scenario where a company is distributing food? They've gone out today, they've distributed at least 1,000 packets to many poor people. Will this be considered as CSR activity? What, in your view, you can use the chat window, will this be considered as a CSR activity? Many companies have done this, and there have been many questions around this. The answer is no. Just because you distribute food packets one day, you are not eradicating poverty. So please read the box, eradication of extreme hunger and poverty. By distributing food one day, you do not make this proper. Say you're doing a midday meal scheme with the government, that will be CSR because you're providing meals throughout the year. Now, another question, what happens in the case where now during COVID, many companies have done this, they've distributed. Will it be considered CSR? So are you trying to tell me that this is going to go for waste? The answer is no. There is one aspect. If it is going to be a disaster management scenario, if the government has declared it to be a disaster management, any activity a company does during that time will be considered as CSR. So for the companies who have done this year, any activity towards COVID will be CSR. But otherwise, just because one day you distribute food packets or you distribute clothes, that will not be considered as CSR. It has to be an ongoing activity. It has to have an impact, and there has to be some social element to it. With respect to COVID itself, like I said, there are 3 significant circulars that have come out to help companies avail CSR opportunities. More importantly, MC has really rose to the occasion and given clarity. What is CSR, what is not? First and foremost, as we discussed previously, in 23rd March 2020, they declared CSR to be a disaster management activity, which means anything that you do towards CSR will be considered as if it is a CSR activity. Second, any contribution to PM CARES Fund will be CSR. Third, what will be considered CSR and what will not, we will discuss the 10th April a little later. Now, second aspect, PM CARES Fund, many companies had started giving to the CM State Relief Fund under the assumption that it will be considered CSR, but the 10th April circular has clearly said that is not a CSR activity. Only PM CARES Fund is for whatever reason. Now, some of the companies started asking, what if I've given to CM before 10th April? The answer is still no. These notifications are only clarifactory in nature. They're not going to be prospective amendments, but it is going to be retrospective. Some companies did loosen this, but it has been considered as if it is a benevolent activity. Second most important is in the employee criteria, which I'm going to discuss a little later in more depth as we go. Now, what you see on the screen are some examples of how companies contributed. For example, if you take Aditya Birla Group, they've given 100 beds to hospital. Yes, it is considered as CSR towards healthcare. It is been considered as donation. Distribution of mask and sanitizer. Now, ideally, if you distribute, as I already said, like the food, it is not CSR. But in this scenario, it is considered as CSR because it is towards your disaster management. And it's also preventive healthcare. So these are the broad areas and how companies have contributed. So if you are a company who has to still do a CSR contribution, you can consider doing it in any of these buckets. Now, largely as per trend of the last 7 years, it is noticed that more people invest in education, health, and wash, and the other aspects are still yet to pick traction in the world today. There's one other amendment. So, like I already said, there are so many amendments in CSR, which is why it was felt important to discuss these provisions today, because these can change a lot of aspects. Supposing you're a company who's a pharmaceutical company into research and development of vaccines, only for the period between 2020 to 2023, if you collaborate with an institution specified in the circular April 24, 2020, only for those activities you can consider it as CSR. Now, why do I say only for those activities you can consider it as CSR? We will touch upon this. Just keep that in mind. Next, let us take a scenario where you're a company, you've had a celebrity Amitabh Bachchan who's going to wash hands, and you've advertised that to increase awareness. Now, we've already explored in HUL scenario where it was not considered CSR. Now you can ask me, you only said disaster management it was considered as, so anything towards it will be considered CSR. Please remember, this is a provision with some gray area. In my view, it might not be considered CSR because when you spend on advertisement, when you're using your products and the celebrity is using it to wash hands, it is still considered as if it's a marketing. Anything advertisement related can be viewed as marketing. So I would still encourage all of you to not consider this as CSR since there is no clarification whether advertisements on personal hygiene for COVID will be a CSR activity or not. Another aspect when we think about these expenses, whether it is CSR or not, the government has given a circular 21st on 2014 and said all those buckets that we viewed earlier has to be liberally interpreted. So if it has some quality, some nature of a CSR activity broadly, then it should still be considered CSR. Which comes to the next question. Let us take a scenario where employees of your company, because of COVID, you are forced to buy masks, you have to install many sanitizers. Whether all these expenses can be considered CSR, even though CSR is a requirement, please keep in mind the CSR provisions has clearly defined what will not be CSR, and one such definition, any amount that you spend exclusively for the employees will not be considered CSR. So there's one way in which you can still claim it. Supposing you're a company where you have not only distributed employees, but that same mask you've distributed the entire street in which the company is in, you have installed sanitizer everywhere. In such a scenario, the entire amount you can still take it as if it is CSR. So as long as it's not done for a specific purpose of the employee, you can still do it as a CSR. Which comes as what is not CSR? One, most important, any activity that a company does in the normal course of business. So we already said if HUL is giving in the normal course its own products, not CSR. But let us take that scenario where I told you there's an amendment into August 2020 which said research and development companies which are already into pharmaceutical can take it as CSR. Now that was only an exception where even though for pharmaceutical companies it was normal course of business, you can still consider that as CSR only because it gives a relief to COVID, provided you get in touch with the institutions. There are many institutions like ICMR, IAM, which are notified by the Companies Act. So ensure that if you are a pharmaceutical company doing any research, you can always collaborate with those institutions and claim that expense as a CSR. As I already said, your CSR expense has to be within India. Anything you spend outside India will not be CSR. It cannot benefit only employees. One way in which you can plan is you do it for everybody. In such a scenario, you can still consider it as CSR. One-off events like marathons, awards, sports day will not be considered as CSR. And of course, CM relief is not CSR. So, which comes to the next question, can employees benefit at all? Now, there were a lot of arguments from company. At the end of the day, you serving your employees is still a social responsibility. You're still empowering lives of people who require it. The answer is yes. As I already said, ensure you benefit all. For example, if you're a company who's going to build a sports stadium, and for whatever reason your employees also use it, that is not a problem at all. It will still be considered as a CSR activity. Similarly, if you're a company who's building a temple, it will fall under the religious bracket. And say your employees attend those temples and make use, that will still be a CSR. It has to not be exclusively for employees. So there are further stringent provisions introduced in your rules 2020, which can be notified anytime, where they said earlier they said that you cannot do any activities exclusively for employees. Now they've clarified and they said activities that significantly benefit employees, which means what does the significant benefit mean? That is, it has to have less than 25% of employees. So, supposing you're a company, just for an example, who's buying masks for your employees, and provided you bought it only for less than 25%, then you can still consider that as a CSR activity now. So, this was done to enable the companies to also serve its own employees. It's a good provision. Some uncertainties is what is this 25%? Whether this 25% is going to be in the value of the salary you pay or in the number of companies. So, in our view, we consider it to be the number of employees because value might be very difficult and will change year on year. So, as long as less than 25% of your employees make use of it, it will still be considered CSR. The next one is your one-off events. Now, the earlier slide I said one-off events like marathon award functions cannot be CSR. This line has been removed in your 2020 provisions. The logic is you can still do one-off activities provided it falls within the bucket of what is described under Schedule 7. Please keep in mind anything normal course of business, anything done for a political party or activities done outside India will still not be considered to be as a CSR activity. The last amendment that came about with respect to COVID was payment. Now, many companies were facing this where without business, without any turnover, they were still paying employees. So there were a lot of representation that was made to MCA to consider that payment that you made to employees as a CSR. Unfortunately, the answer is still no. The reason is MCA considers payment to employees as a moral obligation of the employer. It is a responsibility and duty. You cannot offset it as if it is a CSR activity. So the wages that you've paid your employee, whether your office was open or not, whether you earn profit or not, during COVID period will not be considered as CSR. There's one exception that I gave where they said if it is a payment in the nature of ex gratia to employees who are not on your roll, to contractual laborers, to immigrant workers. Now, in all these scenarios, you can still consider that ex gratia payment qualifying as a CSR, provided it has to be for the purpose of fighting COVID. It should not be over and above the regular wage you pay them. It should be a one-time payment. The board has to declare it to be an ex gratia. Most significant part is you should get a certificate from the auditor that the nature of payment was only ex gratia and it was not in the form of a daily wage given to workers. Now, the reason they have given this is some companies started saying it's an ex gratia payment, but in effect, it was still a wage that was paid. So, in order to avoid all these confusions, this circular had come about. Now, you might be a company where you would not have the time to go get the board resolution order. In such a case, as long as you are sure that it will fall under these buckets, ensure you pay that employee and then on a later date, you get all these documentations in hand. The most important when we talk about ex gratia is you have to regularly pay your wages. It cannot be instead of wages, you're paying ex gratia for the purpose of claiming CSR. Some companies had a doubt whether for the purpose of fighting COVID means should the person have COVID. For me to give the answer is no. It can be for surviving during the COVID times, for giving grains, rice, any aspect. They do not need to have COVID, but just to help them tide over the crisis. Take your contractual laborers, your plumbers, carpenters, all these people are not going to be a permanent staff. You can consider any ex gratia payment made to them as if it is a CSR activity for the year ended March 31st, 2021. Some projects which are considered as CSR, we understood what is not CSR, what can be any road safety awareness, your road accidents are due to consumer protection services, slum redevelopment, all of these can be considered as if it is a CSR activity by a company. As I already said, the MC has now said COVID is a disaster management aspect. Anything done for preventive healthcare and sanitation or promotion of healthcare will automatically be considered as a CSR activity. So, having understood the expenses aspect, let us understand what assets mean for CSR. Now, let us take a scenario where I'm a company. I give funds for construction of a school for another company. Now, in this case, once the school is constructed, will it be an asset in my books? One. Will it be considered as a CSR expenditure? Now, for question number one, please remember, just because you constructed a school, it does not have to be an asset for your books because AS 11 clearly says it has to have long-term enduring benefit. So by building a school that there is no benefit for the company, the ownership is not with the company but for the person for whom you have built the school, and hence it will not be considered as an asset in your books. Second, it is a CSR expenditure. You can still include that in your 2% coverage. Now, another scenario that we have faced a lot is, let us take a software company. It has many software laptops that are not updated, so it starts donating it to colleges and schools. Will this be considered as CSR? Now, naturally, logically, we would think yes, because they're empowering education, they're giving it in kind. We already discussed that anything given in kind will be CSR, but the answer is no. Anything you do in the normal course of your business. So, in a normal course, you're already manufacturing laptop. So, by distributing your own inventory, you are not doing any corporate social responsibility. Only exception is when there is natural calamity, when there is a disaster, and the government declares it to be a disaster. In that scenario, when you donate your own inventory or stock, it will be considered CSR, and you have to record it on a cost basis. So please keep in mind, whenever you donate in kind, it will be considered as CSR only when it is not your own inventory that you're donating. And you have to ensure you record it at a cost value. Another very groundbreaking amendment has come in this, where the Companies Act is now saying if you are a company who has acquired an asset or created an asset and have ownership of that asset for the purpose of CSR, you have to ensure you should transfer it to a Section 8 company or a public authority. So what does that mean to all of us? All the assets that we have considered as a CSR asset in the books today, you have to transfer it and form a Section 8 company if you don't already have one in place, or a public authority that is recognized by the government. And then you can only claim that as a CSR expense. Now, to do this, they have given you a period of 180 days and can be extended for the further period of 90 days. Again, this has been in the draft rules that came out in 2019. We expect it to be notified anytime. So please start planning. If you're a company that has CSR assets in your book, you have to start strategizing and ensure you have a Section 8 company to deal with this. Now, naturally, once this amendment comes into play, you have to have an additional disclosure. That is, when you created the asset, how much money was spent, whether it is transferred to the Section 8 company as per the rules and the timeline given, and other details of how it was created. The reason behind this is they want to demarcate between a company that has CSR assets and how these assets are being put to use by the company. Because what was noticed was many companies started acquiring CSR assets, but not much was done to it. And they started using it for their own business purpose. In order to give it more color to the transaction or to make it more genuine, this amendment has come in. It might prove to be a very procedural amendment at start for companies to comply with, but it has to be seen in the right direction. So as I already said, you can spend either in the form of revenue expenses or capital expenses. Even if you buy a capital asset, if it's for the purpose of CSR and falls under Schedule 7, you can still claim it as if it is a CSR expense. Let us take a scenario where you are a company who's spending on behalf of a third party. Now, take an NGO. For that NGO, if you're spending some amount, but it still falls within the bracket of your Schedule 7. Even in this scenario, it can be considered CSR. The reason is the provisions have to be read broadly. It is not just as long as you have done towards a CSR activity that is being approved, there is no issue as to through whom you are spending this. It can be either you can either give money to the NGO for the purpose of CSR, ensuring it is demarcated to a project. Now, there were some companies which just donated a lump sum amount for a particular cause or for a particular organization. Please remember, these will not be considered CSR. Like I already said, it is not a donation, but it is going to be a contribution. So whatever amount you have set aside or spent on CSR, you have to show the specific project or purpose for which. It cannot be an ad hoc amount. Another question. I've already said you can acquire asset under CSR. Whether the company can claim a depreciation on this asset, no benefit can be availed from any CSR activity. It is truly seen in the social sense. So any asset that is capitalized, you cannot claim depreciation on this. And you have to ensure you have a separate CSR asset tag and you disclose it separately. In order to avoid these cumbersome aspects is why the Companies Act is now saying set up a separate Section 8 company and transfer the asset to that company. What are the tax implications? Now, 37(1) of the Income Tax Act, Proviso 2, clearly says CSR is an expense that is not related to the business expense. So you have to disallow this expense in the books of accounts. Unfortunately, companies have taken a huge hit because they expected to claim it as an expense. They want to achieve the true goal that it has to be towards a social purpose. But however, having said that, there are certain deductible provisions. For example, if you are a company that has contributed to PM Relief Fund, you can claim an ATG deduction. There are various case laws, your escort skill development, various other tribunal case laws, which allows you to claim a ATG deduction on a CSR expense that is permissible. Or any scientific research, rural and skill development, all these activities can be claimed as a deduction under the Income Tax Act. Salary. Now, you might be a company where your own employees might be doing CSR activities. So a very logical question that comes is, can I claim whatever I'm paying to my employees, they are spending the hours on CSR activity, can I claim that as a CSR expense? Yes, you can. They've given you an overall limit of 5% for you to the extent to which you can claim. So earlier, this was not allowed, where any expenses you could not claim, but now the Act has come out with draft rules and said up to 5% of your administrative overheads, be it in the form of payment employees, power, any cost, you can claim as a CSR deduction. Next aspect, whether I contribute to the corpus of a trust or a society or Section 8. Corpus, I contribute the capital of it, whether I can claim that as a CSR expense. Now, one, capital expenses can be claimed as CSR expense. Most importantly, when you contribute as a corpus of an entity, there are two criteria. One, that entity to whom you are contributing as a corpus, it cannot be a company, it can only be a trust, society, or a Section 8 company. They have to be exclusively engaged in the aspect of CSR. 2. The activities in which they engage in should be covered under Schedule 7. So the reason is to ensure that you do not just divert funds to different NGOs, but to ensure that there is a specific purpose for this diversion. Now, when I said, why would a company consider contributing to the corpus of another entity? A very, very common phenomenon that's followed, where large MNCs are not able to do CSR activities on their own. So what they started doing, they started setting up registered trusts, registered societies, or registered Section 8 companies, NGOs, where they will contribute to the NGO and the NGO will take care of the CSR activities on their behalf. It's a welcoming provision, and the Companies Act has termed this as an implementing agency. That is, NGOs or these trusts that are set up implement the CSR activities based on the capital contributed by the companies. So the graph that you see here is largely how it has been followed. Up to 39% of the companies in India follow this implementing agency route. Many do directly, some companies have their own foundation. Now there has been an amendment that has come out which is yet to be notified, which completely changes the landscape in which you're going to view this implementing agency. It is going to affect every company. Naturally, like I said, these roles of NGOs are very important, which is why they're doing implementing agencies. So the rule that comes out now is saying you can only have CSR activities through established Section 8 company or any entity established under the Act or Parliament of the state. What does the second line mean? It means if you are a company that had a society or a trust to do your CSR activities, you can no longer do that. It is no longer allowed for societies or trusts because they are not established under the Act of the Parliament or state. Only a Section 8 company can be considered as an implementing agency. More importantly, a Section 8 company has to go register by filing the CSR Form 1 with the company's MCA portal, and then only they can even be considered. So all the companies that are using implementing agencies, again, you will need to shift to a Section 8 company. You have to ensure that the Section 8 company is registered. Now, for the Section 8 company to register through CSR 1, it has to have a 3-year track record, and it has to have a good backing of CSR projects done through it. The reason is it was felt that large amounts were spending towards CSR, but the right implementing agencies were not regulated or in place. So there are representations that are going to include society in the, because largely even the largest MNCs are now incorporating only societies or trust, owing to the simplicity of incorporation. But this is yet to see the light of the day. It is yet to be included. So word of caution for all the companies to ensure that you have a Section 8 company through which you implement if you are not doing it yourself. What happens in a scenario where this year I've had a great year, I've spent more than 2% on my CSR activity? Can this amount be carried forward? Now, 2016 Act said you cannot. It is very disappointing for many companies where they were not allowed. Say a company spent 4%, it could not carry forward the 2% for next year. It had to again spend 2% freshly. But the Companies Act 2020 has amended, and this has come into play, where whatever excess is being spent, you can carry it forward for any number of years. There is no limit. So if this year your company is doing well, you have investable funds, you can go ahead, boldly invest more than 3%, 4%, and you can carry forward that for the future years. Supposing, let us take a practical scenario where I've built a school or I built a hospital and I'm starting to earn profits from that hospital. Now, this profit, can I take it as a business profit? Can I use it for my business? Answer is no. It is viewed very seriously. Any appropriation, any amount that you additionally accumulation or additional earning that you make from a CSR asset, you cannot take it back to the business. It has to strictly be used only for the purpose of CSR in the unspent account or through the same projects. Now, another amendment that have been introduced in Companies Rule 2020 is in the area where, supposing a company where an average CSR expenditure is more than 5 crores, it has to now mandatorily prepare an impact assessment report. I already said up to 5% you can spend as an administrative overhead expense. Now, for the companies for whom this impact assessment report has to be prepared, it can be extended up to 10% because they foresee that you have to pay a professional to do this. There are many uncertainties in this provision, so we are yet to understand that we're awaiting notifications. What is this 5 crore limit? Who has to do the assessment? What is the format in which it is in? So all these questions are still lingering. We're still awaiting clarifications in this regard. The last aspect, once you have identified the projects that we have touched upon, once you have done all these activities, we are at the end of the year and you still have an unspent amount. What is this unspent amount? I already said CSR goes on comply or explain, where it was not mandated for companies to spend the amount. As long as you set it aside, and if you have not spent it, the board has to explain why it was not spent. There's been a very stringent provision that is yet to be notified, but it has been introduced already in 2019 Act, which says any amount that you have not spent 30 days from the end of financial year 2021, that is your April 30th, 2021, within 30 days you have to transfer it to an unspent CSR account. Not just that, once you transfer it to this specified bank account, if you still don't spend within 3 years, then you have to transfer it to a national unspent CSR fund, which means that money goes out of your hand and the government will take care of where it has to go. This is a clause that has not been favored by companies. As we already said, India is one of the very few countries that has mandated the spending. And now they're not only mandating, but they're also saying it has to actually be done. So there is a lot of revolt that came about, which is why this section has not been notified, but it's worth taking note. Because supposing if tomorrow it gets notified, then please remember for the year ended March 2021, within a period of 30 days, you have to transfer it. A very logical question, whether the 7 years in which I've been doing CSR, if I have unspent, that entire amount I have to transfer, or only for the financial year 2021, whatever I have not spent, you have to transfer. Our view is it has to be read prospectively. Whatever retrospective, you do not have to still do it. As long as you have a plan, you transfer. But from when it is notified, prospectively, the provisions will be applicable. So these are some amendments that came about, some changes. The last aspect that we're going to be taking up today is the penalty. So what happens if I'm not following these provisions? Initially, when the provision was introduced, it was a recommendatory provision where they said you should try and comply. But if you don't comply, the board has to give it a clear reason as to why it was not complied with. So this unspent money you can carry forward year on year. Now in January 2019, when the company's amendment bill came about, it became a penal provision where they said, supposing if you do not comply, if you do not spend properly, in that scenario, there is a fine that goes up to 25 lakhs. And for every officer in default, there'll be an imprisonment up to 3 years. Now, this really shook India because for them, the whole CSR concept was new, and then complying with stringent, and then now making that a penal provision made it very, very difficult. So immediately the finance minister came out and said this is not going to become applicable. They are going to instead have a simple penalty regime. Now, even though they have said simple, please note the penalty still goes up to 1 crore or twice the amount of the CSR that you have to spend. And every officer is still liable to a penalty of up to rupees 1 lakh. So these provisions are still serious. The only aspect that has been removed has been your penal provision of imprisonment of 3 years. So every company has to keep in mind of these amendments. For example, the event where an amendment gets notified and you have not transferred your fixed asset to the Section 8 company, you will still be liable to this penalty of twice the amount of that asset value or up to rupees 1 crore. So all the changes that have come out so far, like I already said, there are about 72 changes to 65 sections in March 4, 2020. The Companies Amendment Act 2020 has already come out on September 20th, 2020, where there have been changes. So it is very important for companies to be abreast and professionals like us to empower them with the changes that are happening in the CSR provisions. MC has truly been evolving over a period. Whether you take COVID, they've come out with 3 circulars. So every time there is a change in the society, immediately your immediate impact is in the CSR provisions. 2 good amendments that will help companies which have come out in 2020 Act is the carry forward of CSR credit, which we already covered. The second is where your CSR amount that you need to spend is less than 50 lakhs. For those companies, you do not have to form a CSR committee. Now, this is a good exemption in the right direction. The reason is If you're already a small company, it might be cumbersome for a private company to form a CSR committee, to have multiple meetings, procedures. So, in order to avoid that, they have given this exemption. Naturally, because of all these amendments, your annual report that you give in your board report will also change. It has to now have the CSR policy. Like I said, this policy has to be approved by the board, the composition of the committee, your net profit, CSR expenditure, how much has been spent, and this has to also be signed by your CFO and your MD. So, indirectly, it is not just a CSR committee, it is not just the board, but every important officer of the company gets involved in this CSR aspect. Now, I already said this annual report. Erstwhile, you have your company's rules, which gives you the format in which you have an annual report. Now, since the rules have been amended, the various amendments that we spoke about today, these also have to be reported, be it your implementing agencies. Now, I've said the company can no longer do through a trust. If you have an implementing agency, sin number of that unspent amount, ongoing projects for the first time has been defined to be projects for a period of 4 years. Administrative overheads, I said up to 5% you can claim as an expense. So you have to give this breakup in your board report, whatever your administrative overheads are. If you have an unspent CSR account and if you have transferred that amount, you have to get the breakup of that. Any asset that has been created for CSR has to be disclosed separately. So all these disclosures are mandatory. The board report of your 2021 balance sheet must strive to include all these aspects pertaining to your CSR. And last but not the least, the CSR report has to be signed by the director or the chief financial officer of the company. So, as a company, it is important you not only plan what your CSR activities are going to be, you have to ensure it ties in with your Schedule 7 activity list. More importantly, you have to start having what are going to be your short term projects, what are going to be long term projects. You can no longer wait after 3 years to disclose. Every year, you have to disclose as a part of the board what the ongoing projects are and when you're going to complete that project. More importantly, the cost of that project you have to allocate on a year basis, and your CSR committee and the action plan of the committee. As a CSR committee, you have to monitor these activities. You have to report on these activities to the board, not just the board, even to the chairman. You have to keep in mind the administrative overheads that are being incurred, because your total expenditure you might not know at the beginning of the year. So it is important to prepare frequent budget, forecast that expense, and ensure you have this report in hand. So this is an indicative legal checklist for a company to do a CSR activity. I'll be happy to share this presentation. My email ID will be there. Then you can send me an email and I'll share this presentation to you. There are many companies that have truly embraced the CSR provisions, be it your Aditya Birla Cement. They've done tremendous work, your ITC group. In fact, they've covered over 40,000 villages, 4 million farmers. So that is the kind of impact and changes that these provisions that we discussed today is bringing in. Take your Mahindra and Mahindra. They've opened out a trust. They've opened many schools all around. The Narkali project, your education of girls. So many aspects and changes are being brought. Now, supposing you're a company who's into agriculture, by merely planting trees, that will not be a CSR. Please keep in mind any activity done in the normal course of business will still not be CSR. It has been in vogue for the last 5 years. It started with the 20% complaints. Today, more than 76% of the companies have already spent the 2%. It's no longer put under unspent amount in your board report. There have been tremendous changes and implications through these provisions. So I promise the last 15 minutes will be for question answers. So this is my email ID for all those who want the presentation. I'm happy to share with it. So with that, I would like to take questions and conclude my presentation. Once again, thank you, Vivek sir, for having me here. It has been a real privilege and pleasure to address through this great YouTube channel. Thank you so much.
So thank you very much, Divyaji, for such a wonderful presentation. And even we request, because many questions are there that we will take, and even some members are asking for the presentation, you can send it out so that we
Definitely.
can post it into the comment box. We will send the link to the comment box, so anybody wants to download, they can download it. And even we have started for the next webinar. Many members are saying Divyaji is speaking on the audit session also, and to please organize the audit session also. So definitely we'll do very soon. We will take the time from Divyaji, and Another queries are there. Contribution to CM fund. I
So
think you have
contribution to
cleared it.
CM fund unfortunately is not a CSR expenditure, so it cannot be claimed. PM Cares fund is considered as a CSR expenditure. So one-off events, as per the current act, it is not considered as a CSR expenditure, but there are draft rules 2019 which are expected to be notified soon because the public comments, everything is concluded, where they've removed this. So maybe if the draft rules are notified shortly, that will be considered as a CSR expenditure.
Okay, one request we have received first time, whether we will provide e-certificate. If anybody needs, we will definitely do. From today onwards, definitely will send the e-certificate to all the participants. You can send us your detail at our email ID csansar@gmail.com. We'll definitely send the e-certificate to all of you. And next query is
Whether EPS reimbursement by central government to companies called CSR, no sir, that is not considered as a CSR. That is it's more on the benefit to the company, so it will not be a CSR activity. Can a company donate towards medical treatment of employees? So any activity that is done exclusively for the employees is considered as a moral obligation of the employer, so it will not be considered as CSR. But if the draft rules get notified, then up to 25% of the number of employees we spend for it will be considered, but that is yet to come out. So as of date, unfortunately, this will not be a CSR expense. Grants
the same
given to own
person.
charitable CSR, or we need to spend through Section 8 company only. So for now, trusts are still included. There are a lot of public comments that have gone in. We have also made representation through our association to include trust along with Section 8 company. It is yet to be amended. So for now, you can include any activity done through your trust or society as CSR, but we have to wait and watch for the amendments and where the government is going to take this. Due to COVID, if profits are stressed and cash flow issues, but for corporate teams, is there any penalty? In car, is auto going to qualify? So even though this is going to be a very different year for companies, you will still have to set that amount aside for CSR. Like I said, even if you earn a loss this year, you have to earn loss for 3 years in order to stop contributing to CSR activities. So you will still have to do that. The auditor will be mentioning it in his report that has not spent. But please keep in mind, you have to only set aside that amount. It is still not mandatory that you have to spend that amount. So maybe next year when the company earns back profit, they'll be able to spend that amount. For now, you can set it aside and the board can give a reason for not spending. Is only corpus contribution is considered, not general grants. So anything in the nature of corpus, yes, it is considered. Grants have to be seen on specific case basis. There is no blanket cost. So specific to your company and what grant and whether it is considered will have to be analyzed. If we have not spent the amount, then penalty is not levied as of now. Will it be levied in further years? So good question, but we do not expect penalties to be levied. In fact, the 2019 amendment that came out was indicative of it, but there was a lot of fury for it, and the government has immediately retracted it. So there is going to be no penalty so far, and penalties can never be levied with retrospective effect. So that is not going to happen. When CSR expenses account in books, yes. So when you spend for your CSR, it has to be accounted separately in your profit and loss account as CSR expense. Not just that, for your income tax, you have to disallow this amount under section 37(1) as well. If it's a CSR asset, you have to tag it separately as a CSR asset and disclose it in books accordingly. Do we have to spend double amount if there is shortfall? I think this question is a little unclear, but as long as you spend the required amount as per the criteria given, it is fine. If you have a shortfall where you do not have the money for it, you can set it aside.
No, I think it may be like that if we have to spend some amount, some percentage, and if there are some shortfalls are there, so next year
Yes,
whether we
so
have
you
to do
have to
double
carry
amount,
forward
something like
whatever
that.
amount you have set aside, you have to spend it towards CSR. It cannot go with that year, it has to be carried forward, and that entire amount has to be spent. when we are short of CSR expenditure, can we compensate in the next year? Yes, you can definitely do that. You have to compensate next year together for the both years. That is why in 2019, this amendment that's come out where it said if you do not compensate, you have to transfer it to a bank account. So that will be a significant change that the Companies Act is bringing in. Could you please tell us a country with? I think globally, all countries have come out CSR. In fact, many countries are now praising India for their provisions where we have come out with comply or explain if you do not comply. Because in many countries, it's only an indicator provision where you, even if you don't comply, it is okay. So I think India is in a good track with globally for the purpose of CSR. But UK, US also have great provisions and policies in place. There is no restrictions on the area or locality for your CSR expense. However, in the FAQ given by ICAI, it is said that close proximity. So you can prefer locations which are in close proximity of your company over locations that are far away. The reason we foresee why this FAQ has come out is because when you make a difference, you have to make it in the society in which you're living in for people around you to benefit from, because they are only taking care of the company as well. But it is not mandatory. You can still do wherever required as long as it's in the Schedule 7 list of activities.
The same question he's asking for me.
About promotion of YOG, I think if you have to check whether this.
Regarding yoga activities.
Okay, so you have to actually check through the Schedule 7. In my view, it could be questioned because you have to see whether it comes under preventive healthcare and proof for it in order to claim it as a CSR. Company decide to adopt 1 or 2 families in the near only to provide them food regularly and arrange money on the education of their children. So this could be considered as a CSR activity because 1, it is not for the own employees of the company, and 2, it's towards eradicating poverty and healthcare. So you can definitely consider this as a CSR activity.
So anyone have any other queries? Otherwise, many comments are coming. Super, ma'am. Thanks,
Thank
ma'am.
you so much.
Presentation, excellent. Other comments are coming. So it's really, really wonderful session. And my sincere once again to the Divyaji for explaining all the provision relating to the corporate social responsibility. And definitely we will call her once again for an audit, and I also requested her for the XBRL filing. So definitely we'll call her for some other time. Till then, bye bye, and once again sincere thanks to Divyaji and all of you for watching this video, and bye bye, take care of you. Thank you.
Thank you.